Well, hello and welcome. The trades are on right now. Let's find out what's playing out in markets that we track. But here are the stories you should be watching at this time. South Africa tightens offshore ship-to-ship rules, sharply increasing penalties and setting strict environmental conditions. And Ghana slips on 2025 Global Peace Index, drops outside top 5 in sub-Saharan Africa. Plus, gold hits a 2-week high as the dollar dips after President Trump orders removal of Federal Reserve Governor Lisa Cook. It's great to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out in the markets. Now, we're seeing oil prices still down after surging nearly 2% in the previous session as traders are monitoring developments surrounding the war in Ukraine and potential disruption to Russian fuel supplies. So it's a bigger drop, 1.48% this afternoon. It was less than 1% early in the morning as we're seeing it at $67.76 a barrel. That's for Brent. U.S. WTI crude futures losing the $64 level at $63.69 a barrel, a bigger 1.71% drop there. Still geopolitics there, driving sentiment right there in the oil market. On the flip side, we're seeing gold rose to a 2-week high today as the dollar slipped after U.S. President Donald Trump said he was removing Federal Reserve Governor Lisa Cook. Spot gold, yeah, we see that up 0.2%, $3,371. The U.S. gold futures, that's unchanged at $3,418. And we see spot silver, $38.67 per ounce. Still that range trade there, 0.3% up. Palladium, a bigger 0.8% up advance. And holding on to the $1,000 level by thread at this point. It's about $95. All right, we see the U.S. dollar index that fell 0.2% against its rivals, and definitely it's all about President Trump there. He took an unprecedented action of firing Lisa Cook, the first African-American woman to serve as the Federal Reserve governor, over claims of mortgage borrowing impropriety. So there you have it. Markets are reacting to other stories now. South African has imported more than 70% of its oil from Nigeria, and that's according to the acting High Commissioner and Consul General of the Republic of South Africa, Bobby Moreau. Speaking at the Outward Selling Mission Program in Lagos, Moreau said Nigeria leverages South Africa's strategic geographic location as a hub to distribute oil and other products across the southern African region, including Botswana, Mozambique, and Lesotho. He stressed that Nigeria and South Africa, two of Africa's largest economies, must lead the continent's push for industrialization and strengthen trade under the African Continental Free Trade Area framework. Meanwhile, South Africa has introduced a new regulatory framework for offshore ship-to-ship transfers, sharply increasing penalties and setting strict environmental conditions in a bid to protect their ecosystem. Under the regulations signed by Minister of Forestry, Fisheries and the Environment, Dr. Dion George, transgressors face fines of up to 2 million rands, that's about $100,000, imprisonment for as long as 5 years or both. The new rules published under the National Environmental Management Integrated Coastal Management Act that bans STS transfers in marine protected areas, aquaculture zones, and within 3 nautical miles of the high water mark. And we see also in the Algoa Bay, that's also there. But in Kenya now, the government has finalized structures for the full implementation of the 20 billion shilling World Bank-backed youth empowerment program. It plans to equip more than 820,000 vulnerable youths with skills, business, capital, and access to financial inclusion under the program. The National Youth Opportunities Towards Advancement project is aimed at helping the country address the unemployment crisis, with Kenya's youth population projected to rise about 22.3 million by 2030. The Reserve Bank of Zimbabwe Deputy Governor Innocent Marshall says that the Zimbabwean gold will be indefinitely backed as the central bank seeks to offshore confidence in the currency ahead of the abandonment of the multi-currency regime in 2030. The market has recently been rattled by the government's announcing that its intention to abandon the multi-currency regime by 2030, with many calling the move premature. This is because Zimbabwe has had several currency flops following their introduction into the economy after a period of exchange rate volatility. Previously, after making a comeback in June 2019, the Zimbabwean dollar was eventually abandoned in April 2024 for the ZiG, backed by gold and forex reserves. And Egypt will launch a new financing initiative to support and revive stalled factories by restructuring and reoperating them as part of a broader effort to boost industrial development across the country. The announcement was made by Deputy Prime Minister for Industrial Development and Minister of Industry and Transport, Kamel El-Wazir, during a high-level visit to Alexandria. The visit included inspections of key industrial facilities, including factories in the engineering, home appliance, and food sectors. He also inspected the under-construction Alstom industrial complex in Newborg El Arab, set to be a cornerstone of Egypt's strategy to localize the railway industry. And in West Africa, Ghana's peacefulness has deteriorated over the past year, according to the 2025 Global Peace Index, with the country falling 6 places to rank 61st globally. The report published by the Institute for Economics and Peace also shows Ghana has dropped to the 7th position in the sub-Saharan African region, down from 4th in the previous year. The 2025 GPI, which ranks 163 independent states and territories covering 99.7% of the world's population, found that global peacefulness declined for the 6th consecutive year. Ghana's overall score deteriorated, placing it behind regional leaders like Mauritius, Botswana, the Gambia, Sierra Leone, and Madagascar.
It's an interactive session with some members of the media to highlight key developments regarding Nigerian conglomerate MSM Group.
It's part of our transparency that makes us to come out and sign with the state.
The company commenced operations in 2011 with interests in oil and gas, fertilizers, haulage, agriculture, among others. The chairman of the company reveals some discoveries by the company.
And something came up that I have left oil and gas for the 4 years until President Bola Ahmed Tinubu came into power. And I approached him and asked his support to MSM Group on how we can enhance Nigeria's production by 1 million tons, 1 million barrels additional to what NNPC is producing. We have gotten the approval from Mr. President, and I'm glad to tell you that we haven't let Mr. President down, because in one of the assets the NNPC handed over to us, they gave us that asset with a reserve of 118 million barrels. 118 million barrels. 118 million barrels. But in less than 6 months of our commitment to that asset, we went back to them and told them that we have found additional 126 million barrels for them. So the total of that asset now is no more 118 million barrels, it's 244 million barrels.
While thanking the president for his support, he also clears the air on some rumors.
We are as transparent as clean glass. We have nothing to hide at MSM Group. When they published that allegations, the first thing we did is we write to the IGP, to the DSS, and to the EFCC. And after that, we send a letter we notify the AGF. We are open, ready at any given time for 100% investigation on these allegations. We are transparent, we are clean, and we believe that these authorities will do justice.
The group is promising stakeholders that the allegations will not distract it from delivering excellence across all its business operations.
And right there, that was the chairman of MSM Group, Mr. Muazzam Meirwani, and I was speaking to select journalists in Abuja. Also, dismissed recent allegations of impropriety against the company, describing them as deliberately being orchestrated to tarnish the reputation of a company built on transparency and excellence. He also said the allegations were the handiwork of faceless individuals. All right, let's get to another matter now. And definitely, we're trying to find a break for the average consumer in Nigeria at this point. Now, we see the price of a 500 ml tub of ice cream in Nigeria. That surged over 18% in the past year, making the frozen dessert an increasingly expensive treat, with a single tub now costing as much as a full meal for many. The industry is grappling with soaring input costs, exchange rate pressures, the same old stories at this point. All right, let's talk to, we have Amira Yakubu, who's the analyst of financial derivatives company. Great to have you in the show.
Hi, good afternoon.
Good afternoon.
Okay,
So, yes.
I agree that ice cream has been on an upward trajectory in prices over the year, where it has increased by 18.12%. And this has posed significant impact on producers for ice cream, which most of the ingredients used in provision of ice cream or production of ice cream is largely imported from overseas. So we are subject to volatilities in exchange rates. So on the demand side, so it's basically pushing for whether the ice cream consumption is going to fall either in a necessity good or a luxurious good. So the cost of a healthy diet a day in Nigeria falls within the range of 3,400 naira to 4,500 naira. And people in rural areas and low-income earners consume even less than that. So people are looking for how to fill their stomachs and not looking at ice cream. With the upward trajectory in the prices, we can categorize ice cream all under that category. So we have power shortages, which also increase the cost of these ice creams, and most of the time, once the input cost is on the high side, it is translated into the consumers of these products. So ice cream is just basically a discretionary purchase and not a necessity.
Right. I guess, you know, it depends on who you are at this point, because I know we have some sweet tooths there, and they'll just, I guess an ice cream will satisfy them, you know, at this point. But what do you think, you know, some of the manufacturers here, you know, doing to, you know, help out, you know, the consumer to, you know, try and, you know, bring those prices down? What are you seeing there?
Sorry, I didn't get the question.
Yeah, what are the producers doing to help the consumers, in your view?
To help the consumers with what?
Bringing down the prices.
In respect of helping the consumers, because there has been a high level of population falling into being lactose intolerant, of which statistics shows that 70 to 80% of Nigerians are lactose intolerant, such that it ranges across different ethnic groups, which the Fulanis have been seen to have a high level of tolerance rates of this product. So there has been manufacturers such that Nigeria produced or Nigeria established its first non-dairy free company, which caters into the larger segment of the population falling under the lactose intolerance group, notably Just Delight. So that has been able to produce a wide range of goods that can cater into those brackets. And several ingredients have also been explored to also cater for health-friendly and allergic concerns of these individuals, such that they explore ingredients such as soy, coconut, and almonds in production. So this has been able to, as it made consumers be able to adjust towards this trend. Notably, the ice cream market also projects to see growth at about 15.3% in the next 5 years.
All right, definitely hope the prices come down, because I like me some, you know, ice cream. Thank you so much, Amira Yakubu, analyst, financial derivatives company. Thank you for coming on today. All right, let's get a quick check on what's playing out with the markets now. We see the NGX All-Share Index continuing in positive territory, just like yesterday as it started the week, 0.14%, up 141,638 points there. That's for the NGX. And we're seeing the insurance stocks, again, still trying to make a comeback right there. But the banking stocks did pretty well yesterday. The sector was up The index was up about over 1%, yesterday. But on the flip side, we see in South Africa, the GSC, that's down. EGX 30 in North Africa, 35,672 points. We'll see a pullback there, 0.38%, right down in Egypt. For the Nairobi Stock Exchange, Monday opened positive, 0.22%, 170.41 points there. Let's get a check on the Gulf region now. Let's see what's happening in the Middle Eastern markets that we track, and we see it's mostly negative sentiment in the UAE. The Dubai index, 0.49% down. Less drop in for the Abu Dhabi index, 0.17%, 10,189 points. Other markets we track right there. If you look at Saudi Arabia, that's the Tadawul, and the Qatari index, the lone gainer right there intraday, that's the Qatari index, technically about 1% up at this point. Tadawul down 0.35%, so we're still seeing pressure right there in the Gulf region. Let's get a check now on what's happening with the U.S. futures. Just the tech-heavy NASDAQ futures able to sustain positive territory there, but not so convincing, just about 2 basis points. 4 basis points down for the S&P 500 futures. The Dow Jones Industrial Average futures, 0.12% down there, 45,297 points. Let's get a summary now of how the markets closed yesterday from our correspondent, Maria Bird.
The U.S. stock market dropped on Monday as the Dow Jones was down at 0.8%, which was a bit of a surprise after Friday's record-setting day, the highest day of 2025 for the Dow Jones. And the S&P 500 also saw a dip on Monday, down at 0.4%. And the heavy tech NASDAQ dropped the lowest at 0.2%. Many investors were very hopeful that we could see record-setting days in the near future, as there was an announcement that we could be seeing interest rate cuts in the near future last week. This was supposed to set a tone for the U.S. stock market, but there's still some instability in the U.S. marketplace.
All right, thank you for that, Maria. Let's get a check now on what's playing out in Asia there with the Asia markets. I'm seeing red on the screen there for the close. The Nikkei, about almost a 1% drop there, 42,394 points. Hang Seng Index, big 1.18% drop, 25,524 points. Let's look at other markets in Asia that we track now. We're seeing pressure right there all through. Nifty 50 in India, that's also down a big 1.02%, 24,712 points. And, definitely it's still on the sentiment of what's playing out in the U.S. There. Talking about President Trump with his latest moves right there. And that's, spooking some, markets at this point. And we're seeing Asia not left out there, technically all closing in the red. Let's see if that also got into the European markets. Let's get a check on what's playing out in Europe now. We have Lars Holter with the details. Hello, Lars.
Hi, Lottie. How are you doing today?
I'm doing great. Is it possible that European markets are doing much better than what we're seeing in Asia?
Sadly, no. We are just adding some more red to your already pretty red wall. We see markets down, apparently, Lottie, almost everywhere. And it's still the same situation here with some pressure on markets all across Europe. But to point out, the DAX in Frankfurt down about 0.4%, so a little less than 0.5%. What I find really strange, Lottie, German markets right now are not really reacting to much news from within the country, besides the fact, of course, there is not much going on in the first place. We're generally looking for any news that could move us, but everyone right now is almost exclusively looking at the U.S. Now, in particular, the Fed, of course, and that's, again, the topic today in Frankfurt, too, for two reasons, of course. There is, of course, that seemingly never-ending discussion over whether or not they will lower interest rates in September, but more importantly now, the biggest story, and I'm sure you had it on the show earlier, we have some interference now, again, from President Trump after he threatened to fire one of the Fed governors. The problem is the more Trump is messing with the Fed and the more he is politicizing what is normally an entirely unpolitical commission made up solely of monetary policy experts, the more he's hurting confidence in the Fed, and that tends to hurt markets in the U.S., but very clearly here as well. And that's one of the reasons, Ladi, why we're seeing markets weak across Europe too.
Yeah, I guess at this point, there's always just drama coming out at this point, and the markets are ready to play, watch this drama and react to it. But, this week it's been 10 years that Germany started to take in, hundreds and thousands of refugees, promised to integrate them into the labor market there. Now a report is out on that. How did it work out?
Yes, Ladi, it's 10 years ago this week that then Chancellor Angela Merkel said the sentence that would follow her for the rest of her time in office. She said, "Wir schaffen das," very loosely translated, "we can do it," or "we can manage that." It became kind of a core slogan for Germany's Willkommenskultur, a culture of welcoming refugees, most of them at the time from Syria, others from Afghanistan and Iraq. And what it meant was that despite many detractors, many people protesting the arrival of more and more refugees, that Germany would be able to take in those looking for a safe home, and that Germany would be able to house them, feed them, and maybe most importantly, put them to work and integrate them into labor markets and society. And Germany did actually do pretty well today. 64% of refugees who have arrived back then are actually working. Compare that to the general German population with about 70% in work, and we see that that's a pretty strong number.
Yeah, quite a strong number. But would you say the integration of refugees was a success?
Yes, Ladi, it was generally a success, but of course, things are not quite as black and white. Here's a bit of a problem. Refugees on average make only 70% of what Germans make on average in terms of their wages. Now, the main reason is that they often work in unskilled jobs. Also, compared to the general population, they are much younger on average, and they have fewer years on the job. So, of course, refugees are getting the same money for the same work, but they do not necessarily have the same jobs on average. Another problem, while 76% of male refugees are working, it's only 35% of women. So there's a lot of potential for things to actually still improve. The problem so far has generally been, especially when it comes to women, that in some of these more typical women's jobs, if you want to make the distinction, like childcare, education, healthcare, many refugees would generally be qualified and might have even worked in such capacity back in their respective home countries. But in Germany, you need specific exams and documents to even be considered for such jobs. Exams from Syria and Afghanistan are often not accepted. The new ones are hard to come by, partially due to language hurdles. So much still has to be done, Ladi, to improve the situation.
Yeah, I guess, it's not perfect yet, but, somehow we'll find some perfection. Thank you so much, Lars Halter, for the details.
Thank you, Ladi.
All right, let's get a check on what's playing out in the crypto market now. Definitely Bitcoin is still under a lot of pressure. Yeah, it's still red on the screen. We're seeing, at this point, lower lows, and we see it's mostly red on the screen there. The pockets of green, mostly some altcoins and some stable coins, showing that some traders are running into safety, trying to escape all of that volatility. I would say Ethereum still holding on to $4,500. They touched 4.9, but that was wiped away once Bitcoin started that big slide down, and most of those longs were liquidated. But let's get a check on some of the headlines in the crypto space now. See, Gemini has just overtaken Coinbase on the US iOS App Store, now ranking 16th among finance apps, while Coinbase trails behind at 20th. This shift comes shortly after Gemini launched its new XRP MasterCard, a move that appears to have captured user interest and driven more downloads. The XRP MasterCard allows users to spend XRP directly from their Gemini wallet, combining crypto convenience with real-world usability. It's a strategic move that taps into both the XRP community's loyalty and broader interest in crypto-backed financial products. And we see Ethereum ETFs performing Bitcoin there. US-based spot Ethereum, that's about 4,429 ETFs experienced the significant upswing with the daily net flow of about $443.9 million, marking the third consecutive positive day, and that's according to data from Social Value. BlackRock's Ether ETF attracted about $314.9 million, while Fidelity, and that's FET, drew in $87.4 million. Other ETFs such as Grayscale, Ethereum Trust, and those from Bitwise and 21 Shares, Invesco, also saw some positive inflows. Notably, the amount funneled into the Ethereum ETFs, and that it was double the total that went into spot Bitcoin, about $110,000 for the ETFs. Now we see BitGet, a leading cryptocurrency exchange and Web3 company. They've introduced the world's first real-world asset index perpetual contract, allowing traders to gain exposure to tokenized traditional assets such as Tesla, Nvidia, and Circle. A statement released, a new product which has gone live recently, marks a step in bridging traditional finance and decentralized finance. The RWA Index Perpetual Contract is built on a composite of tokenized stock indices already circulating in the market, with each index containing one or more real-world assets tokens issued by third parties. So there you have it. Those are top stories right there in the crypto market. And that's how most of the markets we track are looking today. And we'll give you a summary of the close there for the stock exchange right here in Lagos, Nigeria. But I definitely hope you are making profit. From me and the team right here at Channels HQ, is bye for now. And try and make that profit.